Good morning. The world is de-dollarizing, though they are still using USD to do a lot of their trading and their business. This is possible because of new technologies that allow users to go around traditional banks. Tokenization, blockchain, distributed ledgers, these are all examples of the new tools that operators can use and move funds around without involving banks. On this channel, when we refer to de-dollarization, we're usually referring to the process of using non-US banks to do business, even though US dollars might be used. The US dollar is still the world's most common currency. There are trillions of USD sloshing around the world at any given moment because the United States runs enormous twin deficits. Our trade deficits with the rest of the world every day send billions of dollars from buyers in the US to sellers outside the US. And then our fiscal deficit, the titanic US government borrowing and spending, that's another $7 billion or so every day. And lots of that goes abroad as well, to lenders, to foreign investors who are buying some of that Treasury debt. So there are lots of US dollars, and there are lots of people who have US dollars. The problem until recently is that in order to use USD to do trade that the US government didn't approve of, users had to either carry it around in cash, in big bags or trucks or planes, or convert it to gold or something else and then carry that around. But with those technologies mentioned before, everything is easy, almost free, and transactions take place in just a second instead of over days. And it's all outside the Western banking systems. The most successful private company doing all this is called Tether. And as we go through what Tether is doing with just a few $1 billion of reserves, consider what China and the other BRICS countries will be doing with several $1 trillion in USD reserves. Their central banks are tokenizing their USD at the same time Tether is doing so in the smaller and private markets. Wall Street Journal. Tether is a digital US dollar, but it's privately controlled, and the buying and selling using Tether is hidden from governments and regulators. It's called a stablecoin because its value is very stable compared to the other cryptocurrencies like Bitcoin. It pegs to the US dollar 1-to-1, and Tether has built a parallel economy, which US banking officials and our state and justice departments cannot touch. In the places where we have closed off access to our US dollar financial system, or the SWIFT system of bank messaging and transfers, Tether is being used instead, and we cannot see any of it. And the trade volumes using Tether are huge and rising. In a few months, Tether will be doing more business than the Visa credit card networks. And Tether is already making more in profits than Blackrock, even though they have only 100 people working there. CEO of Tether says that the company made profits of $6.2 billion and generates more profit per employee than any company anywhere. 300 million people are already using it. Consider that the population of the United States is about 320 million or so. There are nearly as many Tether users who use US dollars to buy and sell outside the United States than there are Americans who use US dollars in our own banks. And that is a key feature which makes Tether so attractive to so many of its users. The United States can cut off governments and companies from the global trading system, since US dollars, again, until recently, had to go through banks that were regulated by the United States. Tether shows up, they create digital dollars, and now they're getting that business instead. It's a fairly new company, Tether, and they're already making more money than our banks are from Visa cards, and making more money than the biggest asset managers in the world. This is how Tether works. A user deposits funds in any major currency, and Tether issues a virtual coin to that user. Tether takes some money and buys US Treasury debt. We have to assume that this is very short-term paper. And the user puts the tokens in his Tether digital wallet. Once there, they can be traded almost any way he wants. In Iran, for example, they can be used to swap Tether into the Iranian currency, then back again. They explain how Tether developed in Venezuela the United States sanctioned Venezuela and knocked their biggest oil companies out of the banking systems. So Venezuela switched to Tether instead. They demanded payments in crypto, which allows them to still price their oil in US dollars and receive US dollars. In Russia, the biggest banks are doing the same thing, converting rubles into USD and euro. So these are notable examples: Iran, Venezuela, and Russia. These three countries are under heavy US sanctions, but they're able to trade anyway. With Tether, there's no need to go through US banking systems, and therefore there's no oversight whatsoever, let alone any risk of having their assets seized. Naturally, our Treasury Department is desperate to stop all of this somehow. Wally Adeyemo is the Deputy Secretary of the Treasury, and he is asking Congress for new and sweeping powers to do something about all these US dollars being used by all these people the US government thought they were kicking out of the system of US dollars. The Treasury Department needs new laws to go after sanctions evasion, terrorism. Crypto is used by Hamas, North Korea, and Russia to avoid our sanctions. He pointed to Tether by name as a preferred alternative payment system and wants Congress to give Treasury authority to regulate crypto companies overseas in the same way they do traditional banks in the United States. Then they want authority to act against foreign users of stablecoins that benefit from the US financial system, even though they're not using the system itself. Treasury has several major problems here, which are obvious. There are no physical banks involved, so there's nowhere you can send a team of bank examiners or soldiers. That's what distributed ledgers are, essentially. It's nowhere, and it's also everywhere. And it would be wildly profitable to anyone with some US dollars in reserves to create a similar system to what Tether's done here. Here's what that means. Consider how a traditional bank makes money. It takes in deposits and it creates loans based on the reserve ratio. Let's pretend the reserve ratio is 10 to 1. That means $1 million in deposits can create $10 million in loans for the bank, which will be paid back over months or years. That's how banks make money, by creating loans that are paid back over up to 30 years in the case of mortgages. But with Tether, everything happens much faster. They're not a bank, so they cannot create 10 or 30-year loans with their reserves. All they can do is lend them, but they lend them fast. Tether has $120 billion in assets, but they are funding $190 billion in trading activity every day. Their entire book of reserves is being turned over every 16 hours. They make a lot more money than banks just by charging a tiny transaction fee on that daily $190 billion. They're as big as Visa, making more money than Blackrock. They have a banking system that has about as many users as the United States has actual citizens, and they only have 100 people. Again, think of China or India or the countries in the Middle East or Brazil or South Africa. Better still, think of all of them working together, because that's what they're doing. That's what the BRICS countries are. They are giant natural resource economies, plus China, the world's largest manufacturing and export country. They've got trillions of dollars in USD reserves, with billions more coming in every single day. This is Tibet, Xizang. Be good.
His co-workers, and his family, and his friends, and his nation to Christ. Together we lift up the people of Asia. We pray that your Spirit is poured out